Live from Sydney, this is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, Asian stocks rise and bonds weaken on hopes for a deal to end the longest US government shutdown in history. A group of moderate Senate Democrats is said to have agreed to support a funding deal. We discuss what this means for markets and Fed policy with Pepperstone Research and DeGroof Petercam Asset Management. Also ahead, SoftBank-backed Lenskart set to debut in Mumbai after an IPO that raised more than $800 million and also sparked debates about Indian startups' valuations. And China's consumer prices unexpectedly rose last month thanks to a holiday boost in travel and food spending. But a Bloomberg analysis reveals deflation is more pronounced than official data shows. Okay, here's a look across Asia benchmarks and US futures as the government shutdown moves closer to an end. Now, this is as a group of Senate Democrats are said to have agreed to support a deal to reopen the government. Bloomberg government editor John Herskovits joins us now with the latest. So, John, tell us, what do we know about this deal?
I have noticed.
Sure. What the deal does, it provides funding for three government agencies, Agriculture, Veterans Affairs, and Congress itself, for the year, and continues funding through January 30th for the rest of the government. It provides pay for furloughed workers, reinstatement for some laid-off workers, and also it calls back a little bit of funding for some international food agencies, international food aid, and keeps funding for the Government Accounting Office, which keeps track of kind of a watchdog agency. What it doesn't do was provide the key provision that the Democrats have looked for, of providing the subsidies for the Affordable Care Act, Obamacare. Democrats won a concession of having a vote sometime in December for keeping these subsidies. Whether these subsidies will continue or not remains to be seen. They face stiff resistance in the House and could have a difficult sledding in the Senate. So that's where we are now. When I left, there was a procedural vote going on in the Senate for the measure. I think that's what's on the television now. So we have a ways to go in the Senate, and then we are looking at the House.
Okay, so we're heading into day 40 now. What's the earliest that we might see this shutdown officially come to an end?
Great question. So we have the vote in the Senate. This is going to take a while, and then we go to the House. So it's like about 48 hours for the House to come back into session. So at least 2 days from now. But there's a lot of animosity, a lot of bickering. Getting something done in a very short time frame could be difficult. But if everything moves perfectly, it could be early next week in the U.S. that this could move forward and the shutdown could end.
All right, Bloomberg government editor John Herskovits keeping track of the efforts to end that U.S. government shutdown. Let's get a little bit more on the potential market impact now with Dilin Wu, research strategist at Pepperstone Group. Dilin, to what degree do you feel the shutdown's been weighing on markets? And typically when things open up again, we do get some sort of a bounce. What are you anticipating in that regard?
Well, actually, that's a very good question because looking at some of the private sector data, like the drop in energy prices, softer retail sales, and also the slowing rent increases, I think obviously the October CPI could show a bit of a cooling off. And if the data resume after to the end of the U.S. government shutdown and kind of reaffirm this kind of assumption, then that will give the Federal Reserve more confidence to cut rates by the end of the year or in their December FOMC meeting. And to the U.S. equity market, I think that's obviously a boost in general. And actually, the biggest challenges for us is the lack of information or the lack of data. So if we get more data after the U.S. government reopens, I think it would be a good news for the equity or the risk market in general around the globe.
What sort of reaction would you expect to see in asset prices once a deal gets reached?
Well, I think for the U.S. equities, because the uncertainty will decrease after the U.S. government reopen, no matter if they can get the non-farm payrolls report or the CPI or other important data. I think that's obviously a good opportunity for the bulls to buy the dip. And for the U.S. dollar index or the U.S. dollar assets in general, I think it really depends on the upcoming data. So the best case scenario for me is we get 3 non-farm payroll reports from September through November after the U.S. government reopen. And if the unemployment rates stay steady at around 4.3%, then the Fed may not take any risk to cuts anytime soon, maybe by the end of the year. Then it would be a optimistic case for the dollar index to stay strong.
Yeah, we're having to use the word if quite a lot at the moment because, as you point out, there's a lack of official data going on. We've been relying mostly on private data as well. So, I mean, there's a chance we're going to get October CPI numbers on Thursday. What do you think they might show?
Well, actually, we are expecting the U.S. CPI data in October to be a bit below expectations or below what market consensus is, because looking at some private sector data like the drop in energy prices and also slowing rent increase, I think this CPI data could show a bit of cooling off. Also, the Cleveland Fed nowcast model suggests that October's CPI on a yearly basis might come in similar to September's, just under 3%. That said, I don't think that October CPI will drop sharply enough for the Fed to immediately loosen. Also, this kind of alternative indicators from the private sector can't fully replace the authority of official data. And unlike the labor market, where private sector reports like the 8-day pay employment and also job opening can at least partially, fill the gap, for inflation, it's much harder to find reliable substitutes, and their coverage is quite limited. So my bottom line would be the market hopes for a rate cut this year are lower than most people expect.
Yeah, let's dig into that a little bit more. If you're right and the market is wrong, it's overpricing the chances of a rate cut this year, how long do you feel any extended pause from the Fed could last for?
Well, obviously, if we are not seeing, we're seeing a slim chance for the Fed to cut by December or by the year end, then we'll probably look into Q1 2026. And by then, I think probably we are just 1 or 2 more cuts before we conclude this easing cycle. But anyways, we still need to look into CPIs, non-farm payrolls, this kind of important data before the Fed resume its next cut.
So in an environment like this, where there is a little bit of equivocation, uncertainty about where the Fed heads next, where do you put money to work at the moment? How do you balance between getting some returns and safety?
Well, obviously, we are seeing some of the resilience in gold market. So under this government shutdown, uncertainty, and a bit of an indication of a slowdown in the U.S. economy, people are still tending to put some of their assets or allocate some of their portfolios into gold as a safe haven demand. And I think obviously gold is something worth to looking into, especially if it can hold above 4,000 by the end of this week. And apart from gold, I think obviously we can look into some potential opportunity in Asian market because of the high valuation in AI and tech sectors in the US. Many capital and investment funds are spilling over to the Asian equities like CN50, the Hang Seng Index, and also Nikkei. So if people are really favored in tech innovation or this AI chips kind of narrative, then potentially we can look into some buying the dip opportunity in Asian market.
Yeah, look, I want to talk about the themes around AI a little later when we come back to you after the break. But before we just wrap up that discussion, I just want to get your view on the broader macro perspective in the US in particular, and whether you've got any concern over these persistent deficits, the ever-rising debt pile in the US as well, and now this plan to deliver a $2,000, what President Trump is calling a tariff dividend to Americans. That sounds an awful lot like GFC-style stimulus checks. Do you think there's any risk around this?
Well, actually, this kind of fiscal deficit is always being discussed by many of the traders and market participants. I think that's obviously something to look into, because one of the important conditions in the to the end of the U.S. government shutdown is the ACA kind of plan get passed, and that will even increase the deficit to the GDP to around 8% in the near future. I think that's obviously something we need to look into down the road.
All right, Pepperstone research strategist Dilin Wu is going to be staying with us. As promised, we will take a closer look at the AI boom and growing concerns over those stretched valuations. Stay with us. This is Bloomberg. We've got some mixed trading across mainland and Hong Kong markets today after China's unexpected inflation rise in October. Now that's as markets are also weighing fresh concerns over the tech rally in Asia after a sudden slump last week. Well, for more, Bloomberg's Asia equities reporter Winnie Su joins us. So, Winnie, are we seeing a shift in Asian markets, especially around the tech narrative?
Yes, Paul, I think that's what we're seeing. But, just today, yes, there is a bit of an optimism when it comes to the potential end to the U.S. government shutdown, and also Nvidia's Jensen Huang talking about having more chip supplies from TSMC. So that's lifting the overall sentiment a little bit. But when you take a step back, there is still a lot of volatility and risks around Asia tech stocks are rising compared to its U.S. peers. You looked at how volatile the sessions were last week. It was coming off, a lot of profit taking as well after how Asian stocks really outperformed U.S. peers. We're talking about the MSCI Asia headed for its biggest yearly outperformance against the S&P by the most since 2009. So it's natural to see some of these profit taking after shares have gone so much. And also, because retail investors are a big part of Asian stocks, that really drives us up the volatility as well. And adding to that, we've also seen that recent dollar strength coming in, so weighing on the riskier assets, and Asia stocks, specifically Asia tech stocks, are also considered on the riskier side. Then, even on top of that, we're talking about a bit more concentration risks around Asian stocks right now. TSMC headed for its maybe 45% weighting on the TAIEX index, and Samsung, SK Hynix combined contributing to a 30% of the Kospi index. And traders we talked to in Japan saying that top 5 companies on the Nikkei 225 account for about 40% of the Nikkei index, which means that any big slump or changes in these tech shares are going to impact broader market in Asia as well.
Yeah, well, to your point on volatility, we're seeing a rebound today. We've got the Kospi better by almost 3% now. SK Hynix, you mentioned, up 7% right now. So are we expecting some more corrections to come?
Yes, it really is a battlefield here between the retail investors and institution investors, because last week when we talked to traders about how the week has been, it was some sell-off by institutional investors, and right after that you saw that dip buying from retail investors, a sense of FOMO and rushing back into that AI rally. And it really is that back and forth buying and selling. And for now, we are expecting that the correction is likely to remain, especially because if we're talking about valuations being that big concern concerned, it really hasn't corrected much yet. And last week on this show, we talked to Mark Mobius, who also said that we are expecting more correction in the AI space. So overall, the cautious optimism is there, but just because how far things have rallied, institutional investors specifically waiting for more correction to come. And when we talk to the fund manager at MNG, they're also saying that still waiting on the sidelines for more opportunities to emerge after further corrections. So that's exactly that's exactly the trend that we're expecting going forward, at least towards the year end.
All right, Bloomberg's Asia Equities reporter Winnie Su there. Let's get back now to Dilin Wu, research strategist at Pepperstone Group. She's still with us, and she believes some of the optimism around AI is starting to cool off. And Dilin, I just want you to unpack that idea a little bit more for us. So when does cooling off become a full-blown .com style market correction?
Well, actually, over the past few months, the optimism around AI has clearly gone a bit overboard to me. And actually, last week, traders and investors generally trimmed their positions in high valuation AI-related stock. While there was probably some dip buying on Friday, the overall trend was still risk off. And now I think the market is entering a reality check phase. And actually, it's not only Magnificent Seven from the US equity market. Money chasing tech and AI story has spilled over into Asian markets too, pushing up the concentration and valuations of the big tech names within regional benchmark indices.
So when you look across the AI and tech landscape at the moment, are there any names that stand out to you that look well positioned to endure any sell-off, and are there any that look particularly vulnerable?
Well, I think one of the interesting observation I have, though, is that within Magnificent Seven, performance is starting to diverge a bit. For example, Nvidia and Palantir, they're the poster children of the AI rally, basically, have been pulling back, while Apple is relatively holding up well. So to me, it shows investors are getting more selective within tech, rotating towards cash generative defensive names rather than chasing high valuation, high risk growth stories.
And how about the AI story in China? Because, much like other markets, we're seeing some of those stocks performing very, very well. But how does the story in China compare to elsewhere?
Well, I think the AI chips domestic substitution story is really popular in China, basically because of the previous trade friction between US and China. Many traders or investors are putting their chips on some of the AI names like Cambrican, Tencent, and Alibaba as some of the established ones. And but to be very honest with you, I think trading this highlights as if all Asia is making money from AI is a bit of a stretch, because for one thing, AI-related returns typically take time. What I'm saying is basically initial investments are big and margin aren't always high at the start. And for another, AI-driven growth is uneven across companies and different parts of the value chain. Chip makers, for example, as I mentioned, Cambrican, directly benefit from a surge in AI compute demand and also this kind of domestic substitute narrative, while traditional software or hardware companies may only benefit indirectly. So in my view, China or Asian AI kind of story definitely has some competitive edge, but we're still a way off from large-scale monetization.
Yeah, do you have any broader concerns as well about what's been described as the circular nature of some of these funding deals around AI?
Well, I think market expectations for AI are already quite aggressive, and there's a lot of fund managers and capital investing a lot in AI, maybe starting from the second half of 2022 already. And even if some of the earnings beat a little, not even by a little, for example, Nvidia and Palantir, as we just mentioned, did a great job in the last quarter. Stock price reactions could be muted because investors and this kind of huge fund have largely priced in these gains already. So I would be more cautious in regards to putting more fund or capital into the AI narrative in the near future.
Just heading back to China now, because I'd like to get your thoughts as well about what's happening in that broader ecosystem. We just had some CPI numbers for October, showed a seasonal rebound. Do you think that's going to endure, or do you see this deflation cycle continuing?
Well, that's a great question. And actually, I say most accurate to describe the current situation is that the economy is soft, but bottoming out in a way that looking at the signal we already have, although we saw the CPI is is above the market consensus, and but still the consumer spending is not showing a strong momentum. At the same time, the new RMB loans came in below market expectations, which means corporate investment and credit expansion are still sluggish. Also, PPI remain negative, so deflationary pressure haven't fully eased. Exports are picking up, but mostly driven by intermediate goods and contract manufacturing, not domestic demand. So in the early part of Q4, we're still likely to see a continuation of a moderately soft or steady transition pace rather than a sharp rebound, I think.
And what's your outlook for consumer-facing, consumer discretionary stocks in China?
Well, I think I won't be overly optimistic about that part because obviously the domestic consumption is still below the government or the authorities' expectation, and we are yet to see some of the follow-up stimulus measures by the Chinese government. Maybe we can look into the CEWC or Central Economic Work Conference on early December to have more kind of insights about the stimulations in the upcoming year. But before then, I won't be overly optimistic about Chinese economy or the equity market.
Dilin, before I let you go, we're both here in Australia. You're there in Melbourne. I'm here in Sydney. I just want to get your thoughts on the RBA's next move as well, because they're on pause. We've got some employment data coming out next week. The Aussie dollar's heading for a rare annual gain against the greenback on the back of monetary policy divergence. Do you get a sense maybe the easing cycle here in Australia is done?
Firstly, I think we are still looking into Australia's October jobs data, and by the end of this week, and we're expecting the data to stabilize and show some of the improvement. That means we'll still see new jobs being added, but it won't be a surge at all, and the unemployment rate will likely stay comfortably around current levels. And I feel like the small uptick in September's unemployment was mostly driven by a higher labor force participation rate, more people re-entering the job market, and a slowdown in new job creation. These are really just more of a short-term blip, not signs of a deeper weakening. So I expect October's number to settle back into a more normal rhyme. And if that is really the case, then I won't see any opportunity for the RBA to cut by the end of the year. But maybe we're still expecting one cut in Q1 26.
All right. Dilin Wu, research strategist at Pepperstone Group. Thanks so much for joining us. Coming up, we're going to speak to the world's largest aluminium company, Hindalco, about their latest earnings. Stay with us. This is Bloomberg. Welcome back. You're watching Insights. Here's a quick look at where markets stand. As mainland markets head off to the lunch break, Japan coming back online. A little bit of weakness now creeping in for some of those Chinese stocks. But take a look at the Kospi, up by 3%. Some of that tech-inspired selling that we saw towards the end of last week in sharp reversal today. And even Brent crude catching a bid there, 64.07 a barrel at the moment. The world's largest aluminium company by revenue, Hindalco, reported consolidated net income of $534.6 million for the second quarter. That's up 21% year on year, and it comfortably beat estimates. Now, Bloomberg Intelligence says Hindalco's Indian operations could remain robust, bolstered by resilient domestic demand and strong aluminium prices. Joining us now is Satish Pai, Managing Director at Hindalco Industries. Satish, thanks so much for your time today. I do want to start on some of those aluminium prices that have really rallied strongly this year, and that's driven some strong growth for Hindalco as well. So how do you see those prices evolving over the coming quarters? Are those gains sustainable?
So I think the first part for an upstream company like us is the cost curve. So what we are very confident about, we just came out of a monsoon quarter where we managed to get a pretty good cost of production, stable operations. So now going into the next 2 quarters, we are comfortable that our cost curve is going to hold steady. So I think on the top line itself, when you look at LME is showing remarkable resilience. I think the supply and demand is quite tight. You have news of some smelters in some part of the world shutting down. So we believe that at least the December quarter, the LME is going to be quite strong.
So I want to basically ask the same question, but about copper as well. How's your outlook there on pricing and market dynamics also?
So look, the copper prices, I think, can only be headed one way, that's upwards, because the copper demand for various electrification, solar, EVs is holding quite strong. And the copper mines themselves actually are running into all sorts of supply side problems. So what that means is that copper prices are going to be, holding at this $10,000, $11,000 per ton level quite comfortably.
Okay, so you're optimistic about the outlook for some of these key commodities. So in terms of expansion, are there any new businesses or acquisition opportunities that you're looking at the moment?
So, we have announced a fairly aggressive $5 billion worth of upstream projects in India. So we are expanding our alumina refinery. We are doubling our aluminium capacity. So I think over the next 3 to 4 years, a big expansion of the upstream business in India is what we're doing, because we are running at a net debt to EBITDA negative in the Indian operations. The cash generation is very healthy. So we are really going to expand our Indian business. Indian economy is booming. Indian demand for aluminium and copper is very strong. So I think the combination is a big expansion in the India business.
And offshore, you previously announced also the acquisition of Aluchem, and that's been delayed, however, due to the US shutdown, as many things have been. I'm just wondering if you can give us any update on the progress of that.
No, we are also waiting for the CFIUS approval, and it's been delayed because of the government shutdown. We hope that it will come through in this December quarter.
And you've also announced a $750 million infusion into Novelis. There have been a few disruptions there, a fire incident as well. When do you think you're going to see a Novelis listing?
No, I think that for us, the priority today in Novelis is to finish Bay Minette and get Novelis to be cash flow positive again, which we think will happen in calendar year 28. So I think until then, we are focused on getting the operation stable, finishing the large Bay Minette project. I just wanted to mention that Novelis actually had a pretty good Q3. If you take out the impact of the tariffs, their EBITDA per ton was over $505 per ton. Underlying market demand for can is extremely strong. So I think that, our focus in Novelis is to restart the Oswego mill, which we hope we'll do by the first week of December. And I think that going into next year is going to be finishing Bay Minette. That's our priority.
Now, of course, India and the US have been experiencing some tension on the trade side of things. I'm wondering if what you're looking at in terms of manufacturing expansion in the United States. You're considering relocating any projects there to boost capacity and also negate the impact of tariffs?
Actually, that is our strategy, because if you see Bay Minette, the $5 billion project is going to add 600,000 tons of rolling capacity into the U.S. in Alabama. and that can be expanded to 1.2 million tons. So we'll be having over 2 million tons of rolling capacity in the US going forward. So we think that that is going to be certainly a differentiator, because going forward, the US market will want aluminum that is rolled or extruded in the US, and I don't think exports are going to be viable in the long run.
How do you see the trading relationship between the US and India evolving in 2026? Do you anticipate more upheaval, or do you have some optimism?
I think we are generally very optimistic about the US-India relationship.
Could you give us any more detail about that? Why do you feel optimistic?
No, I think that's because it's a long relationship. There is a mutual reliance from a geopolitical point of view. The Prime Minister and the President get along very well. So I think that's why we are very optimistic.
Of course, India's got a very weak rupee at the moment. How is that weighing on your business, and are you doing anything to mitigate against it?
So really, if you see, our top line is dollar denominated and our costs are rupee denominated. So a weaker rupee actually is very beneficial to Hindalco India.
You were talking about the robust domestic demand in India at the moment for many of your products. Can you tell us a little bit about how you see the infrastructure build-out in India progressing?
So in India, a couple of things have happened. GST 2.0, which is the rationalization of the VAT structure, was just announced. So what has happened is there is a huge, the Diwali season has been very, very robust from a consumption point of view. So when we look at demand for aluminium and copper, it's been driven by building and construction. The infrastructure builds are quite healthy. Electrification, packaging, white goods, industrial. So all the sectors, we are seeing like 8 to 10% growth from a demand point of view for both aluminium and copper.
Do you have any concerns around risks in India, particularly around the consumption side of things?
So I think that the overall risk remains driven by macroeconomic situations worldwide. So right now, generally the US economy, Chinese economy are doing relatively well. Europe is stable, and India is doing quite well. So unless there is some major upheaval in the larger economies in the world, I think India is on a good track right now.
How are you managing input costs at the moment? Because a lot of your industries are quite energy intensive.
So I think for us, the input cost, which is really power, and in India, large part of our power is coal-based. The availability of coal, the power of the cost of power coming from coal is very much under control, and we'll be having our own coal mine, so we'll be backward integrated. So I think that is really the strength of the Hindalco upstream business, is that control on our power cost. We are seeing a bit of inflation when it gets to calcined petroleum coke, which we have to largely import from outside of India. But on the alumina and the power costs, this is where our strength is.
And what are you doing in terms of approaching your carbon footprint? Are you doing anything on that front to reduce the size of that?
We are actually very, very active. We have committed to 30% of non-coal-based or green power by 2030. This year, by the March quarter, we'll be more than 500 megawatts of solar, wind, and pumped hydro. So side by side with the coal, we steadily make progress, because an aluminium smelter needs round-the-power renewable. So that is what makes it technically challenging. But we are actually ahead from compared to many other companies in this journey towards getting more low-carbon power into our mix.
Yeah, one of the key ingredients of renewable energy also is rare earths, and this is something the United States is very keen to diversify its sources, breaking China's stranglehold on that market. Are you exploring any rare earths projects at the moment?
We are. The Indian government is also actually quite seized about rare earths and a host of critical minerals. So we are looking at exploring many blocks in India. We are also putting up recycling, because another source of rare earths is recycling electronic wastes and PCBs. So quite a few initiatives led by the Indian government that Hindalco is a part of.
Of course, timelines to get rare earths projects up and running are quite long. It's an expensive business as well. So when might we expect to see some of those projects start to appear in Hindalco's bottom line?
So I think that, our e-waste recycling project will get commissioned by December of next year. So I think in the calendar year 28, we should start to see some of the benefits of those rare earths coming out of electronic waste in, let's say, calendar year 28.
Of course, we've got elections in Bihar underway. How closely are you watching that, and would it potentially have any impact on your operations?
No, and actually not. I think that we are very much focused on our business.
Okay, it's probably a wise way to be. So looking ahead to the coming quarters, what are the key risks that you see on the horizon?
I think that, for us, I keep repeating, for us in the business, the economic uncertainty with geopolitical turmoil remains our biggest risk. We hope that trade frictions will ease out and the economic environment will get stable. And I think on the commodity side, as long as the economies are fine, the demand for aluminum and copper will continue to be strong because of electrification and data centers, etc. So I think the biggest risk for us remains what I guess is there for everyone in the world today, that trade frictions and economic uncertainty go away.
All right, Satish Pai, Managing Director at Hindalco Industries. Thank you so much for joining us today. Well, let's take a look at Indian markets just ahead of the open. We are sitting up like this. We're waiting on a big trading debut as well from Lenskart. We'll bring you some more information on that shortly. But in the pre-market, things are looking pretty quiet at the moment. The Sensex pre-market pretty much becalmed. And as we were discussing with Satish there, the rupee is still pretty weak. About 88.69 at the moment. Let's take a look at some more top corporate stories that we're following. ANZ has posted full-year profit that missed expectations, dipping 14% to $3.8 billion. The lender's annual report shows current and former senior executives took hits to variable compensation due to past problems with risk management. CEO Nuno Matos is on a mission to revamp the bank by reducing costs and making the firm simpler. Pfizer has agreed to buy Metsera for up to $10 billion after a tumultuous bidding war with Novo Nordisk. Pfizer raised its offer to as much as $86.25 a share, and that matches Novo's revised bid. Metsera cited a call from the US FTC on potential risks from the proposed Novo deal structure. Pfizer had already secured FTC clearance for its bid. Nvidia CEO Jensen Huang says he's asked TSMC for more chip supplies to keep up with booming AI demand. Speaking at a TSMC event in Taiwan, Huang said Nvidia's AI memory chip suppliers have scaled up capacity to support the company. TSMC's CEO, C.C. Wei, confirmed Huang's request, saying the chipmaker expects record sales every year. China has confirmed that it's taken steps to exempt compliant exports of Nexperia chips intended for civilian use. Now, at the same time, the Commerce Ministry urged the EU to press the Netherlands to, quote, correct its erroneous practices. Now, the move follows talks between Dutch and Chinese officials after China curbed exports in retaliation for Dutch controls on Nexperia. Coming up, as promised, eyewear retailer Lenskart makes its debut in Mumbai after an $821 million IPO. We're going to discuss the outlook and concerns about valuations in Indian startups next. This is Bloomberg. welcome back. You are watching Insight. Let's check on the Indian markets, which have just opened for trade, been up and running for a couple of minutes now. We're seeing some modest gains at the moment, not quite of the magnitude of the moves we're seeing on some of the tech-heavy Asian indexes, but modest risk on sentiment there. We have, of course, heard the news that there is encouraging progress to reopen the US government, which is helping support asset prices. A little bit later today, we'll also hear from the RBI Governor, Sanjay Malhotra. He'll be speaking at a banking and economics conclave. The RBI is also going to be conducting a government bond auction later. The rupee, meanwhile, still looking pretty weak on an historical basis. Also, we're going to be watching out for today the eyewear retailer Lenskart, making its trading debut in Mumbai, and this comes after the firm's $820 million IPO sold out in less than 5 hours. And this sparked some concern over Indian startup valuations. For more, let's get to Bloomberg's Manuel Baigorri. So, Manuel, what are we expecting for the first day of Lenskart's trading?
Paul, another day, another IPO debut in India or here in Asia Pacific, where we're seeing very hot equity capital markets. Lenskart, the eyewear retailer backed by SoftBank, making their trading debut today. A lot of criticism, a lot of interesting debate on social media over the last few days over the valuation. I mean, valuation concerns have been around in India for quite some time. Reality is investors are betting on huge potential growth in the market. So Lenskart is just the last one, obviously, that has drawn the attention over its sheer valuation. But the reality is demand is there to support the transaction. Over $100 million IPO starting trading today in Mumbai. We'll see. It remains to be seen. Direction of travel here is too early to call it. But the reality is we need to look into India perhaps in the long term, in a more longer term framework, given the growth of the country. But India remains a very hot market. Paul, we are getting super busy with lots of transactions. The pipeline remains very robust, and I think it's going to be a very busy fourth quarter.
Yeah, Manuel, just want to pause for a moment to bring viewers' attention to what you're seeing on the bottom of the screen there. The Senate in the US has the votes to advance a bill to end that shutdown, getting into 40 days now. So under this agreement, Congress would pass a full-year funding for the Departments of Agriculture, Veterans Affairs and Congress itself, funding other agencies through to January the 30th. But it looks as if the Senate has got the votes now to end that US shutdown. It's been a while. All right, let's get back to that Lenskart debut, Manuel. So you were sort of alluding to this a moment ago. I mean, this listing comes amid growing concerns over some of the really high valuations we're seeing in new Indian listings. So do you think this is going to have an impact on trading in the short term and the long term?
Well, there could be, Paul, some impact, short term, perhaps not necessarily long term. I mean, that will ultimately depend on the company's earnings and growth prospects over the coming quarters and years. Short term, perhaps, given the criticism that we've seen over the last few days. But again, I mean, valuations in India have been skyrocketing, and we've seen investors coming in and supporting big deals at very, very lofty valuations. So if the company's fundamentals are there to support those valuations, the company, why not, should do well over the long run. But it's still too early to tell. Now, I guess the bigger question is whether there is a bit of a bubble in India, perhaps, with some of these valuations getting really, really rich. Mm-hmm. The reality is we've been talking, I feel, about this for quite some time, and it continues to be a very, very active market.
Okay, Bloomberg's Manuel Baigori there in Hong Kong on the Lenskart debut. And let's stay with new listings and get to the Philippines, where Maynilad Water Services is planning to improve its services in Manila and beyond, backed by proceeds from the nation's second largest IPO in history. Its Friday debut seen as a key test of investor appetite for the Philippine market. And Maynilad President and CEO Ramoncito Fernandez spoke to us about their plans post-listing.
Aside from complying with our franchise requirement, the listing of Maynilad has received a very strong interest both domestically and internationally. In the international front, we have gotten investments from ADB and IFC as cornerstone, aside from very interesting sustainability-led investors like Robeco and Novelis of UK. This has really generated very robust demand in our IPO, such that at day one we had to take the upsize option of our offering.
It didn't quite translate into a robust trading debut, though, so I wonder, what are your thoughts on that?
I think we were affected also by the Asian environment last Friday, but we're looking forward to a better performance actually, because as we have seen today, the Asian markets are up again. So we hope to ride also with that. Does the IPO cover all your funding needs, or are you looking to raise more? The proceeds from our IPO will fund partially our 163 billion capex commitment to our regulators for this current rate rebasing. And these funds will go to our 5 pillars of our capex, namely water source, non-revenue water reduction, wastewater coverage and increasing capabilities, customer engagement, AI, and also our foray into improving automation. The company has also faced some challenges in the past, including on political risk that led to the renegotiation of your contract with the government. I wonder, how are you assessing some of these risks as a sort of headwind for the company going forward? I personally feel better after our concession agreement was revised and renegotiated, solving the contentious provisions in our contract. But in exchange, we were able to get 12% return on our opening cash position. But the other thing that gives me confidence is, aside from the concession agreement, we have a franchise together with it that has been extended to 2047, and therefore a more stable framework that we're operating.
That is Maynilad Water Services President and CEO Ramoncito Fernandez speaking with Bloomberg's Avril Hong. Now we have more to come in our next hour of Insight. Keep it here with us. This is Bloomberg. Welcome back. You are watching Inside. Let's take a look at how markets are tracking at the moment. It's mostly risk-on day for some of the major markets. We've got a pretty decent rally happening in Korea at the moment. The Kospi better by 3%, led by some of those tech names. Elsewhere, we've got the Nikkei also performing pretty strongly, better by 0.9%. Even crude oil rallying at the moment. But we had some news out of the US, as you can see on the bottom of your screen. The Senate does have the votes to advance a bill to end the shutdown. But it's not over yet. We still need House lawmakers to return. They need 2 days' notice to get back to D.C. Any senator can force delays as well, and we do have word that some House Democrats as well will continue to fight this bill. That's according to House Democratic leader Hakeem Jeffries in a statement on Sunday night. All right, let's get a little bit more on this now. We are joined by Laura Davison on the US Senate taking that major step towards reopening the government. This is after a group of moderate Democrats broke with the party, voted to support a deal to end the shutdown. So let's get a little bit more detail on this. Bring in our Washington Deputy Bureau Chief Laura Davison. So, Laura, what broke the siege here? What brought about the breakthrough, and who's had to compromise on what?
Yeah, so what has really gotten bad in the past several days in the U.S. Has been air travel. There's been a lot of chaos at airports and flight cancellations. We've also now, the shutdown is in its 40th day. You have millions of federal workers who have gone without paychecks, as well as 40-some million Americans who were expecting food aid to arrive almost 2 weeks ago that hasn't yet hit their accounts. You have both hunger and flight delays, as well as people who are working without pay. And this has really just amounted to pressure on some of those moderate Democrats who represent states that maybe Trump won, or that have, that they're also appealing to Republicans to say, look, we need to go ahead and reopen the government. It was a small subsection of Democrats. This is really going to cause some fissures within the party going forward. But this is, you had a small group saying, look, we need to, even if we're not getting our demands on health care, they got a promise to hold a vote later in December on that. So they are saying, look, we were able to get our priorities, if not right now.
So if this gets passed, how long is the deal going to last for? What is the risk that we're back here again in weeks or months?
It is very likely, or at least possible, that there could be more shutdown action once we enter 2026. This bill funds certain portions of the government, particularly the Agriculture Department and the Veterans Affairs Department, for a full calendar year. But for the rest of the government, which is, the vast majority of the spending, that funding will run out on January 30th. So that sets up another deadline here where lawmakers could, if there is an impasse, could shut down the government again. Shutdowns are quite rare typically, but we've seen those tick up, particularly when Democrats, they don't have other places to force their agenda because they're out of control in Washington. So forcing a shutdown is one of the few opportunities they have.
And is it all over in terms of the Senate as well? Because isn't it correct to say that any one senator could force a procedural delay here? Is this a done deal?
It is not yet. There's a couple things that need to happen. So the vote in the Senate that just happened, that was just a test vote, sort of a procedural hurdle. They actually still have to vote on final passage of this. They could do it if all senators consent quite quickly, or it could take them several days if there are senators that want to throw up some roadblocks. The bill then needs to go to the House. House Democrats have said they're already not going to support the bill. This can pass on Republican votes alone, but we're watching very closely, particularly some conservative hardline members that typically vote against spending bills. Republicans are going to have to scrounge up every vote they can to get us across the finish line, and then it goes to Donald Trump's desk for signatures. So there's a lot of things that have to happen before the shutdown can officially be over.
All right, well, at least there's a first step. Bloomberg's Laura Davison there in Washington. Thanks so much for joining us. Let's get the market perspective now from Peter de Coensel, Head of Investment Management at Indosuez Wealth Management. Manages about $45 billion in assets. Peter, thank you so much for joining us. Now, in terms of large sums of money, this shutdown's been costing the United States about $15 billion a week. How confident are you that we're at the beginning of the ends now for this shutdown, and what sort of impact do you expect to see on asset prices when it finally does end?
Well, good morning, Paul. Well, we do not expect a lot of shift in market sentiment given the probably the end of the shutdown, who has taken about 40 days, setting a new record. However, what we do see is that the economy is, on a steady growth path, around 2% real, and that the economy has been really supported by the capex boom across AI adopters and infrastructure. So taking the level of, or the contribution thereof, around 1.2% of real GDP. So on balance, we see that the K-shaped U.S. economy, when we look at consumption, has been impacted by the shutdown, especially along the lower cohort of consumers, but that the middle class has been maybe adapting consumption as well. So on balance, I believe it will be good news that this standoff comes to an end. And we should hope, as your previous speaker pointed out, for a bit longer than only a 2-month solution, and we could look into especially the next 12 months for a bit of stability in that respect.
Well, of course, one of the symptoms of this shutdown has been a lack of official government data. Now, I'm assuming that we may not have the US CPI numbers, which were due to be out this coming Thursday. But based on what we can read from the tea leaves, the private data that's around as well, what do you think inflation in the US is doing at the moment? Is it still sticky?
Well, apparently it is. If you do not look at the official year-over-year figures, but you look at the 3-month annualized figures, even adjusted for the difference between CPI and PCE, you see that the overall CPI on that basis is running about 3.3%. Exactly in line with the core CPI, the past 3 months annualized also at 3.3%. But if we dig in a bit deeper, we do see that on services and supercore services, CPI, again on the 3-month annualized, is around 4%. Shelter for that same metric is about 3.3%. Yet the all-important core goods inflation, whilst during the summer and over the first months as the tariff debate and negotiations went on, there were below 2%, and we didn't see any inflection point. However, the latest figures point to an increase in those core goods inflation, again 3 months annualized, around 2.6%. So there we see a pop, which might definitely turn into more sticky inflation and make the job of the Fed a bit more difficult beginning of December. They are looking at employment and employment figures. That's, I believe, their first attention point and as part of their mandate. However, the inflation picture is effectively making their life quite difficult for the moment.
Yeah, it's an interesting dilemma because some of the recent Fed speakers that we've heard have some have emphasised the risk around the jobs market, others emphasising the greater risk of inflation. So it does appear that we're setting up for a coin toss at the December meeting. But if the Fed does remain on hold, how long do you think any pause could potentially be?
Well, it's effectively based on a set of conditions, be it the tariff discussions that are ongoing. It's effectively the standoff between labor market figures, and in that respect, we definitely have seen, given the steep drop in immigration for the U.S., that the labor market and the non-farm payrolls are in between plus 30K, plus 50K month over month. So we definitely see a labor market which might be less dynamic as most of us have seen it over the past years, meaning that if the impact of or the consumption, which caters for about 65 to 70% of U.S. GDP, might falter over the next quarters. We might see that the Fed will be on that loosening path, maybe not as far as the market has been pricing of late, that we would move towards 3% by year-end 2026, but definitely 3.25, 3.50 as policy rate might be in the cards over the next 12 months. So in that respect, the curve steepening might be, we might be in front of a second bout of curve steepening, but definitely the markets are expecting, and probably the Fed will lean into that expectation over the next 12 months.
Mm-hmm. You mentioned at the start of this conversation growth in the US, and it is accepted wisdom that it's really only recessions that cause bull markets to die. What's your view around recession risk in the US, and could growth use the boost from a rate cut?
Well, definitely when we are in a rate cutting cycle, most often we've seen that recessions are pushed off, are pushed down the road. We rarely have seen that recessions entered the moment we were, most of the time it was, because of tightening of financial conditions that recessions came about. Here we have a set of circumstances whereby globally, and in particular in the US, we will see monetary policy alongside of fiscal policy, which will drive a pro-cyclical agenda. And in that respect, we will have to look at what kind of risk factors might cause that the pro-cyclical nature of monetary and fiscal policy might still impact. And there we might see that one of those risk reversals would be in the energy complex for whatever reason, that all of a sudden energy across the globe with an impact on inflation and potentially with an impact on consumer confidence and corporate confidence might disturb the outlook and the financial conditions in general going forward. But most of the policies ahead will lean into supporting the liquidity within markets. An interesting element here is the announcement made by the Fed president that the ample reserves that are present in the U.S. system, around $3 trillion, will be maintained going forward. QT will be ended 1st of December. And we should expect then that QE, as they will probably not call it QE, will resume over 2026 as they want to maintain the excess reserves in an 8 to 10% band as a percentage of GDP. So we might see that the Fed starts buying between 30 to 40 billion in treasury bills as of 2026 in order to respond to the increase in GDP as well as in credit linking of the financial institutions, and therefore they'll have to raise the balance sheet going forward. Will it be a solution to potential market volatility? It might not be, but it will certainly help.
All right, Peter de Coensel of Indosuez Wealth Management, thanks so much for joining us. Let's get you some news on what's happening with the Lenskart trading debut, which is happening today in Mumbai. We have pre-market discovery price at 390 rupees, and that's kind of interesting because that's down about 3% from the issue price of 402 rupees. We will have official trading of that due to begin at the bottom of the hour. But grey market pricing suggested that we might see a bit of a premium to that. It was trading at 447 rupees on the unofficial market versus the 402 rupee IPO price. So there we have the discovery price of 390 rupees, looking a little bit soft. Now that IPO did raise $821 million. The debut was priced at 238 times last year's fiscal earnings, and it was oversubscribed pretty heavily as well, led by institutional investors. So we'll bring you the open of Lenskart when it happens at the bottom of the hour. Still to come this hour, Bloomberg analysis shows that China's falling prices is actually hurting more than what the official data shows. We'll take a look at the true cost of deflation next. This is Bloomberg. Let's get you back to breaking news out of Washington, D.C. There you see it is night. Senators now heading home. They're going to return on Monday to continue work on a bill to end the shutdown. But there has been progress. The Senate voting 60-40 on a procedural measure to advance a bill to end it. So that is a first step. We saw a group of moderate Democrats breaking with their party leaders to support that deal. Seeing some modest gains there for S&P futures, up about 0.7%. But there is a long way to go yet before this shutdown ends. 40 days deep now. Well, let's get to China, and consumer prices unexpectedly rose in October as holidays during the month boosted travel, food and transport demand. But a Bloomberg analysis suggests a longer-term deflationary trend has taken root. For more, China correspondent Min Lo and Eric Zhu, economist with Bloomberg Economics, joins us out of Hong Kong. So Min Lo, let's start with you. Can you just give us a breakdown of the data, and is this the start of a sustainable recovery?
Yeah, we are certainly seeing a bit of a relief because the inflation data turned positive after 2 months of deflation. I'm talking about the CPI number that was 0.2% in October compared to a decline in the previous month. PPI as well, easing from the previous month, falling by 2.1% versus 2.3% the previous month. But you take the long view, so far this year, CPI has been hovering at zero or sub-zero levels, and PPI has been declining for about 2 years and 10 months. So many economists believe that this is quite an entrenched deflationary trend here that is not likely to turn around before the end of the year. And you can see here the CPI, the core CPI is 1.2%. That is the bright spot here. It's a 6th consecutive month of increase so far. But it also means that the anti-involution campaign probably needs a little bit more strength from the Chinese government, especially next year. We're not expecting them to do much this year because growth is on track to hit the 5% target this year. But next year, perhaps they might strengthen the enforcement there when it comes to fair price competition among companies.
So Eric, I want to get to you as well. What's your view on that surprise? A seasonal blip or the start of something?
I think the surprise was mainly on the CPI side. So like you said, I think it's mostly because of some one-off boost from the holiday. But if we use the PPI to, a better gauge of the government's anti-involution progress, so the increase, the drop in PPI deflation was more modest than previous months. So that could be a sign that the anti-involution, the policies are slowing down the progress. So given the PPI is still negative 2%, so we expect the progress will be quite gradual going forward unless the government take more forceful measures. And for the PPI to get back into inflation, I think this still requires lots of work from the government. So our current expectation is that given the current progress, we might will not see the PPI get back to inflation until middle next year, the earliest.
All right. Bloomberg also did his own analysis of China's price data over the past 2 years. Can you tell us a little bit more about the findings?
Yeah, this analysis gives us a little bit of a more granular picture of what inflation looks like behind the headline numbers. So we analyzed 67 products, goods and services over the past couple of years and found that 51 of these had seen price declines, many of which were steeper, much steeper declines than what the headline CPI suggests. So you take a look at this chart, you can see that the biggest declines come in items like ordinary items you can find in your kitchens, like pears, like cucumbers, eggs, eggplants, if we can pull up the charts. And you can see in the next chart that those are seeing double-digit declines, especially things like BYD cars down 27%. Elsewhere, we're looking at things like household appliances. Even those are seeing declines, modest declines of about 4 to 8%, things like microwaves, fridges, and so on. And that is despite the household appliances being one of the standout sectors in retail sales because of the government subsidies so far. Elsewhere, where we're seeing inflation from the pool of data that we got so far, they're mostly in the services sector, things like kindergarten fees, like your residential management fees, as well as attraction tickets, 3-star hotel rates, for example. So a pretty uneven spread of price changes across the board. But what is clear is that we're seeing steep declines in certain pockets of the economy, and that is crimping on corporate profits. If you look at the first half of this year, Chinese listed companies that reported losses, that was more than 25%, which is the highest in a quarter of a century.
So, Eric, you've also published analysis of what this means for Beijing's anti-involution policies. Can you walk us through the key takeaways?
I think the inflation data, the most recent inflation data show that there's still lots of work to do on the policy front. And so far we have seen the policy largely focused on supply side, right? But I think many local governments, they worry about, cutting the capacity, worrying about the negative impact on employment, on local tax revenue. So I think it's unlikely for local government to be very progressive, on cutting capacity. So that means probably to permanently or more sustainably lift the inflation, we think the government need to think more about and also action more on the demand side, right? They need to think about more measures trying to help households to improve income, improve job prospects, so they are more willing to spend money. And I think last week there was a very interesting point raised by economic professor in China that one probably very efficient way is to cutting the long working hours by Chinese workers, right? We also had a similar view before that Chinese just working too hard, so they're working too long and they're squeezing the time to consumption. So I think that's one interesting, way to help consumption.
Okay.
Thank you.
Work less hard. China correspondent Min Lo and Bloomberg economist Eric Zhu. Still to come, we'll update you on eyewear retailer Lenskart making its debut in Mumbai after that $821 million IPO. Pre-market pricing coming in at 390 rupees. We'll have the open next. This is Bloomberg. Welcome back. You are watching Insight. There on the screen you see the debut of Lenskart. Let's listen in.
7, 6, 5, 4, 3, 2, 1.
Okay, so Lenskart making its trading debut there. This is a company that designs, manufactures, retails eyewear and lenses. It also tackles home delivery and testing as well. It's backed by SoftBank also, but that price action, pretty interesting, already slipping more than 10%. Now, this IPO raised $821 million, heavily oversubscribed. The debut priced at 238 times last fiscal year's earnings. The grey market pricing suggested we were going to see an 8 to 10% premium, where it was trading at 447 rupees on the unofficial market, and there we see it sinking pretty hard right now. 367 rupees, off about between 8 and 10%, depending on which moment you look at the screen. Now, this is going to raise some broader questions as well about some of the exuberance that we've seen around India's IPO market and how sustainable that is. So we've got those Lenskart shares slipping quite dramatically on the trading debut. Right, let's get to Bloomberg's Manuel Baigorri for a little bit more on this. So, Manuel, interesting price movement there. What are we to make of that on Lenskart's first day of trading?
Yes, Paul. I guess in a way, unsurprisingly, given all the social media criticism that the company had attracted over the last few days over its valuation, as we were discussing earlier on the show. Valuations in India have been a bit of a concern for quite some time. We've seen a number of companies trading fairly well upwards on their trading debut. It's not the case for Lenskart. You were alluding to the valuation of the company over 200 times their last fiscal year earnings. That is pretty high, but we have seen very lofty valuations in India before. I think the way investors tend to look at the market is a little bit more in the long run, so say 5 to 10 years from now, given the growth potential of the market. But obviously concerns have been simmering for quite some time about whether some of the companies are fetching very, very high multiples and whether some of them might get overpriced. There is always a dilemma when pricing an IPO. We've seen this all over the place, whether it's worth going for a very punchy, attractive multiple or whether it's worth going with a more conservative one that may potentially reflect a better share reaction on the first trading sessions. There is always that dilemma facing companies and their advisors. I suspect there is no right or wrong as long as the company fundamentals sustain the company's performance over the next few quarters and next few years ahead. But India remains a super hot topic for equity capital markets. We've seen also interesting activity in mergers and acquisitions as well, keeping us super busy, Paul. And there is more to come after Lenskart. So I think this will be a good lesson to learn for investors, for other issuers coming to market in that debate, in that dilemma that they face when pricing an IPO.
Yeah, so in that sense, can you put this debut into the context of India's deal-making arena this year and what's still to come?
I mean, last year, Paul, we saw a record in terms of IPOs. This year started a little bit, kind of more subdued, but it's picked up cadence and picked up momentum into the fourth quarter and into next year. Let's not forget that there is some really big ones in the pipeline, including Geo, which could be the largest ever in the country, potentially coming next year. So the exuberance that you were referring to, rightly so, remains and is likely to remain given all the excitement around the country for the foreseeable future. But that obviously doesn't discount the fact that companies need to be realistic and approach valuations in a conservative, sometimes more real way based on their earnings and their prospects. So we are bound to see some bumps around the road. Definitely some companies will perform better than others. But I think if we look at India in the medium to long term, is the trajectory that matters. And I think that India has been holding up quite well, particularly even more so in the last couple of years. So definitely a lot of activity. We expect a lot more this fourth quarter, even if we see some short-term hiccups like Lenskart today. I think companies, investors are super excited about the country. We've seen a huge increase in retail investors in the country as well. So it's not just global investors, but also local investors coming in and piling in and supporting some of these IPOs.
All right, Bloomberg's Manuel Bagoi there in Hong Kong. We are seeing those Lenskart shares bouncing off those opening lows, now off about 3%. Still to come, we're going to be live at the AI Summit in Seoul with Figma's Paige Costello to discuss how AI is reshaping the future of production design. Stay with us for that conversation. This is Bloomberg. The AI Summit and Expo in Seoul is underway. It's bringing together global companies, institutions and academics to explore the latest trends in AI and industrial innovation. And Bloomberg anchor Sherry Ahn is there with our next guest. Sherry.
And what a timely place to be here in Seoul at the AI Summit, right, Paul? Especially after that big tech sell-off that we saw last week. And Asian-Pacific tech stocks really leading those declines as we continue to see this concentration in regional benchmarks. We're talking about the Samsung and SK stocks, for example, here in South Korea, taking up about 30% of the Kospi. And we have seen the Korea Stock Exchange also warning about the 200+% rise of SK Hynix this past year. We will continue to talk about the business and also the potential of artificial intelligence here at the AI Summit. Joining me now is the Figma Vice President of Product, Paige Costello. Figma, of course, is a design software platform that went public earlier this year. Paige, great to have you with us. And you had a 200+% pop during your IPO back in August. And now you have given a revenue guidance, boosting it for the full year. What's leading those gains?
Yeah, so Figma is a product platform for the entire team that supports the process of going from concept to execution for all of the world's leading companies in how they bring a digital experience to market. So whether that's a website or a software app, if you've touched something like Uber or Airbnb or the app from Kakao Bank right here in Korea, those things were built by people using Figma. And so really what we do is we think about what does it take to bring something to life and support the whole team in getting there. So what I would say to your question is the aspect of where we're going is more about the future of shipping. And so that's changed quite a bit. And so being here at the AI Summit, you might be hearing about prompts and prototyping and bringing things to life. There's a lot of talk about more people joining the process, but we're really excited to see is that we're not just raising the floor in more people participating in building software, but raising the ceiling in terms of what's possible with creative expression.
When it comes to your revenue, for example, more than half of it is international, right?
Yes.
Where is the biggest potential in terms of what products resonate across the world?
Honestly, what I would say is everyone is experiencing the need to build new software applications in an AI native world. New things are possible that were just hopes and dreams just a few years ago. And so when I've had conversations here in Korea and in Japan in the last week, and what I've noticed is extreme enthusiasm for Figma Make, which is Figma's prompt to app solution. You give a natural language prompt to say, here's my idea. It builds out code. It has a full functioning prototype experience. And what people are amazed by is they don't have to write a document anymore that says, this is what it would look like. Wouldn't it be cool if? They can actually do a demo instead of a memo. And showing and not telling is the way things change and the way things happen. And these organizations are excited to chart a new course and a new future. And as we think about the evolution of software, there is going to be more software, but it's not just volume. What will differentiate companies is the ones who care about design. That will make them stand out. Because design isn't just how something looks and feels, it's really how it works. And the best companies really care deeply about design. And we create that fundamental platform that lets the whole teams, from engineers to designers to product managers, collaborate in what they bring to market.
There's a lot of concern about how that will change the labor force itself, given, of course, not only the collaboration, but the efficiency and the productivity, which could potentially mean job losses. Is that something that you contend with?
It's something that we are curious about, but what I've been pleasantly surprised by is the increase in the ROI of a given employee. Before, it took a lot of work to move something through the system and actually ship software. Now we're seeing the time to ship really decrease, and the value of a given designer or a given product person in thinking through ideas, identifying market trends, and acting on them has heightened tremendously. And so I'm actually quite optimistic, not just about what people will ship, but how they will do it.
Your CEO has talked about complementing what Adobe does, not necessarily replacing it. Tell us a little bit more about the features, especially the new ones that you have coming up, that are leading to more optimism about the stock.
So what I would say is we recently acquired a company called Weavy that brings the best of both worlds for AI native tooling, so making selections about which AI models you might choose to create an experience combined with professional editing tools. So something that we have always supported is control and precision when it comes to the design of an experience. And with AI, you want to use the best models available to you, see what the impact is of making different selections, apply with a controlled way a particular experience, and then make a choice and ship it to customers. And so the way we're thinking about this is more about exploring ways that video and image editing can meet people building digital experiences in a way that supports their intentions.
You talked about acquiring Weavy. We've seen such a number of deals recently in the AI space. Anything related to the tech sector and artificial intelligence, and just money going back and forth in a way, and lots of concerns about circular deals. When it comes to the exuberance that we're seeing around this technology, how do you at Figma look at the changes occurring in the space so you also don't fall behind?
Well, Figma shipped an AI native tool in Figma Make, the prompt to app prototyping thing I described, and acquired Weavy with the intention of shoring up a new opportunity. We saw a solution that felt very Figma native. So Figma's platform is an infinite canvas which supports divergent explorations of possible paths and user journey workflows for companies building solutions for their customers. And so the way we think about it is creating core value and making sure that the AI solutions we build and the AI solutions our customers build are key to the value prop of the given software offering. And so making sure that that's in line is really key to making sure that nothing is extraneous.
How much of what you do is also just R&D in order to improve your products, and how do you transfer those into actual commercialization?
Right now, we're going to market so quickly that I was just talking to a gentleman who was using Figma Make, and he said it had improved since 2 weeks ago. We ship daily at Figma, and so the impact is we get the feedback right away. What are people using? What do they understand? What do they need more of? And we're following our nose in terms of what customers need. And right now, the need is clear. People want to create solutions that have more precision with their teammates and not do it in a siloed way across tools. So something that's concerning is as more software tools hit the market, you can end up with a smattering of tools. We really want to make sure that no person at an organization is an island. The tools must talk to each other. And so the Figma platform really supports the entire team, being there for the whole process, giving feedback, and getting their vision into production.
Talking about talking to each other, you mentioned earlier before we came on the show how you had Japanese native languages and many different ones around the world, and that's what really makes Figma stand out. But at the same time, I do wonder if all of these different customers have different needs depending on what region you are in, and how Figma can actually play into that.
We do see more compliance needs in some markets, and we serve that with governance offerings. But in actuality, people come for the same core things. They really come to build software together and to do it in high fidelity. And so the level of control that Figma offers, from the kind of brainstorming or whiteboarding state early to prototyping, doing the demos, not memos culture, to actually shipping software using Figma in partnership with engineers, is how people around the world get their digital apps made.
I know that you said that your products change every 2 weeks, but is there anything on the pipeline that you're actually excited about when it comes to Figma?
I think what I'm really excited about is brands have a specific way they want to look and feel in the world. And that context, those guidelines, are useful not just to the teams who are building designs, but also to AI. And so we're really thoughtful about what context Figma has for our customers to use AI tools to build solutions that look and feel like them.
Paige, Costello, thank you so much for joining us today here in Seoul, Figma Vice President of Product here at the AI Summit. Back to you, Paul.
All right, thanks very much, Sherry. That's Bloomberg's Sherry Arndt there. Staying with tech, we're watching TSMC and its suppliers in Asia after the Nvidia CEO, Jensen Huang, gave another indication that AI demand is strong. For more, let's get to our Asia tech correspondent, Annabelle Drewers in Hong Kong. So, Belle, Jensen Huang actually made these comments at a TSMC event over the weekend. What did he say?
Yeah, that's right, Paul. So we had the annual TSMC Sports Day. Jensen Huang doesn't actually always attend this, but he has really been stepping up his visits to Taiwan over recent months. I think it's the third time we've seen him just in the last quarter or so. But essentially, the focus of this meeting, or his comments, was really relating to AI demand. And Jensen Huang told reporters there that essentially he's asked TSMC for more wafers. He wants more capacity to come from the company. So it's just another indication that we're continuing to get that AI demand, at least from Nvidia's perspective, but also from a lot of its suppliers, does remain robust. So some of the key comments that we got as well was Huang talking with reporters about the different AI memory chip suppliers as well. You're talking about TSMC, also SK Hynix, but they essentially have scaled up to tremendous capacity. That was Jensen Huang's words, but again, to try and support the company. So TSMC, for its part, the last we really heard from this was from CC Wei, the CEO. You can just see there speaking on stage at the TSMC Sports Day. But CC Wei has really spoken about the capacity constraints, and this has been a key challenge for TSMC because they've certainly got the demand. How much capacity can they ramp up to meet that demand in the market has really been one of the major questions for the business.
So we've also got some key tech earnings coming up this week. How's the AI theme going to play into those?
Yeah, AI is going to be a really key theme I think we're going to see across the week. I mean, some of the key earnings we've got, Hon Hai, for instance, is one of those, and the AI server business has been really strong for the company over the past several quarters. But AI server business is going to be a key area to track for Hon Hai, so we've got those numbers coming up midweek. Some of the other names they're watching as well that have more of that AI theme, well, there's Tencent, for instance, in China. I mean, that's more on the consumer side, just related to China tech. You should also mention JD, of course. It's going to be reporting. SoftBank is another name to track because its numbers are due on Tuesday. In aggregate, we're going to be watching really the consumer side of the business. That still is about 45% of their revenue. But on the AI theme, it comes back to the Vision Fund and the performance of its publicly listed, but also its privately held businesses. And on the public side, you've got ARM, the chip designer that listed and has been a really big win for the company. But also on the privately held side, you obviously can't go past OpenAI because SoftBank's poured more than $30 billion into this business directly. So again, more updates on what we can expect as well, especially because OpenAI, actually there was some reporting from Reuters recently, but they could be looking at a listing as soon as 2027 with the filing to the exchange as early as next year.
Yeah, we've also got an update in the meantime on the situation with the Dutch-based Nexperia. What can you tell us about that?
Yeah, I mean, Paul, I think you probably know that there's really a lot of details to this story. It's a sort of saga that's been going on now for a few months for the company, but at least since September of this year. So it relates back to governance. It also relates to a payment dispute, and it's between the Dutch-based headquarters and also its China subsidiary. And so at the heart of this also is geopolitical tensions. It's tensions not just between the Netherlands and China, but it's really the EU more broadly that's been the focus, and it has raised the risk as well of supply chain chain shocks to the global automotive production business or industry as well. So Nexperia halted wafer shipments to China or to its China factory because the local unit refused to make payments for them. China, in return, retaliated by restricting exports of components from its Nexperia Chinese facility. Now, over the weekend, actually, the Dutch Prime Minister, this is Dick Schoof, said that China's agreed to resume deliveries of Nexperia chips from plants in the country in mainland China. China as well on Sunday, they confirmed that news and said that they've taken steps to exempt compliant exports of Nexperia chips intended for civilian use. But they're also urging as well Europe and the Netherlands to make progress in resolving this clash, because that's sort of the hope now. If China sort of backs down, it opens the door for retreat from the Netherlands as well, because that government control is being imposed by the Dutch-based Nexperia, but it certainly relates very closely to Wingtech, which is the China-based parent as well. But the pressure you really are starting to see, as I mentioned, the risk for the global automotive industry is certainly playing into earnings, because you've heard from the likes of Volkswagen, for instance, and they're saying that there could be an impact of this global chip shortage. But Honda just had their earnings as well, and you saw the results of that because they've slashed their annual profit forecast and they're halting production at several plants. And that, again, you can see that drop down nearly 5%. So again, it's those bigger ramifications.
All right, Annabelle Drull is there wrapping up the latest in the tech space for us. Let's take a look at the latest that's going on in markets at the moment. Been somewhat of a mixed day on some of those Asia benchmarks. The Kospi has been performing particularly well, rebounding impressively from some of the selling we saw towards the end of the last week. Some of those tech names such as SK Hynix enjoying a pretty strong rebound at the moment. We've got the Nikkei also better by a little bit more than 1%. The broader MSCI Asia Pacific in positive territory by about 0.75%. We are seeing a little bit of softness in some of the mainland China stocks, but elsewhere it's pretty much a risk-on day. Now, part of the reason for the optimism is the news that we've had out of Washington, D.C. in the past hour or so. The Senate voting 60-40 on a procedural measure to advance a bill to end that shutdown. But it's just the first step along a very long road. Senators have gone home to get some rest, but they'll be back tomorrow to continue working on that. It's helping to support the oil price as well. Oil rising along with wider markets on the news of a possible end to that shutdown. However, supply-side risks remain. We'll hear from OPEC due to release its monthly analysis tomorrow. That is it, though, for Horizons in Middle East and Africa. Do stay with us. No, that's it for Inside Horizons Middle East and Africa.